Hi, I'm Patty Laforte with Vintage Lending, and today we're going to talk about self-employment loans. A lot of people in today's society are self-employed or are in the gig economy, and as a self-employed person, you have to use tax returns to get your mortgages, and sometimes there's just an awful lot of deductions on there, and there's just not enough personal income on those tax returns to qualify for a mortgage. But mortgage companies recognize that there are a lot of people that actually do have the income. So they've developed mortgage programs designed specifically for this market. And one of those programs is a bank statement loan. Now, this is a type of loan where we use the deposits on your personal or business bank statements as your income documentation. So what we do, basically how it works, is really simple. We take 12 or 24 months of your bank statements, we add up all of the deposits and divide it out by the number of months, and that becomes your monthly income. Then, depending on your industry, we'll apply a factor to accommodate for business expenses. So, for instance, most real estate agents who work from home don't have any staff. We may only have to use an expense factor of like 15% of the gross deposits. So 85% of the commission deposits would be considered income for qualifying for a mortgage. Now, if you're a plumber with a truck and some staff, they may use 50%. So it's specific to the industry. Now, here are some other qualifying parts for the loan. And this is not an all-inclusive list, but it gives you some primary things to know about the loan, the most common things that kind of get people knocked out. Now, you do need 2 years of housing history that we can document, and they will do a verification of rent. So we want 2 years of on-time rental payments that we can document. Payment shock can't be more than 300%. So this means that if you're currently paying $1,000 a month in rent, then your new mortgage payment under this program can't be more than $3,000, including taxes and insurance. You do need 6 months of reserves, which means you need a bank account or some type of money account that has at least 6 months of housing payments in it, and that does include taxes and insurance. So it can be a 401k, savings account, brokerage account, just anywhere where you have some liquid money that you can get to. Now, with one of the programs that has better interest rates, obviously, you need 4 years of self-employment history, but we do have programs that you only need 2 years of self-employment history. You can do a 90% loan to value with a 720 score or over score. One program, you can go to 80% at 660. But of course, the rate is adjusted a little bit for that. So just a 10 or 20% down payment for the program. You can do an interest-only loan payment, or you can choose a program that's fully amortized. It's up to you. But the biggest bonus, second homes are included. So you can do this on a second home. So those of you in St. George or Park City, this is one thing you need to look at. So let me know if you have any self-employed buyers that would like pre-approval. I'm happy to take their bank statements, do a full run-up for them, and let them know how much they qualify for, and then see if this is a program that would work for them or not. I'm Patty Laforte with Vintage Lending, NMLS 1977614, and Vintage Lending NMLS 287106.